At the start of the show today, I want you to picture a scoreboard. Not the sports type, an economic one. And this week, Taiwan was winning on every single line of that scoreboard. We've been through this scenario many times before. The Taiex, Taiwan Stock Market Index, the number that tracks the combined value of all the companies listed on the Taiwan Stock Exchange, cracked 45,000 points on Monday. Then 46,000 by Thursday. Both of those were all-time scores. The economy is now expected to grow by more than 9% this year, and that's roughly 3 times what forecasters predicted just 6 months ago. And on Thursday, a global ranking put Taiwan 4th in the world for economic competitiveness, its best ever result, behind only Singapore, Hong Kong, and Switzerland. Now, these are economic powerhouses. So by every measure that usually gets reported, this was Taiwan's best week in years, maybe longer. Except there's a scoreboard and then there's the game being played underneath it, which is exactly what we're looking at this week. Hi, you're listening to Beyond the Reefs, a show produced by Radio Taiwan International. Here we talk about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.
In the lavish halls of Versailles, U.S. President Donald Trump puts his distinctive signature on a document the world's been waiting for. In 14 points, this memorandum of understanding is meant to end a war that spread through the Middle East over months, shaking the global economy in the process. Later, Trump confirms to expectant reporters outside that the deal is done. As Trump heads back to the U.S. from the G7 summit in France, the U.S. and Iran enter a 60-day period of further talks. For now, they've agreed fighting is over, including on the Israel-Lebanon front. Both sides will end their blockades, shutting off the critical Strait of Hormuz and Iranian ports. The U.S. will lift some sanctions and unfreeze billions of dollars in Iranian assets.
Asian stock markets leaped on Monday morning as investors reacted to a tentative peace deal between the U.S. and Iran. The Taiex, Taiwan's benchmark stock index, joined the rally, closing up at 2.78% on Monday. This is while Japan's Nikkei led opening gains in Asia, jumping 5.5%. South Korea's Kospi climbed 5.1%. Analysts say hopes for lower oil prices boosted sentiment in energy importing economies.
The U.S. Defense Department is renaming its Indo-Pacific Command to Pacific Command. That was its original name. It was changed to include Indo in 2018 to reflect increasing importance of the Indian Ocean and Southeast Asia. In a statement, the command said the name change honors its deep historical roots. It says its mission and commitment to a free and open region remains unchanged. Despite the updated name, the command's geographic responsibilities will not change.
Now, before we get to the meat of the show this week, here's what happened in Taiwan. Last week on the show, we talked about the correction explained. That was the title we gave it. A week when Taiwan's stock market got hit hard and then almost immediately bounced back. And we tried to explain why. This week, the market didn't just bounce back. It kept going. The Taiex closed above 45,000 on Monday and above 46 on Thursday. Both of them new all-time highs. Turnover, that's the total value of shares changing hands in a single day. You know, how many people are selling, how many people are buying. It hit the equivalent of roughly $48.5 billion on Thursday alone. And that's an enormous amount of activity. At the same time, Taiwan's central bank held interest rates steady for the 9th quarter in a row, and that's over 2 years without a single change. And Taiwan's GDP growth forecast for 2026 has now been revised up to 9.45% by the central bank itself, and 9.33% by one of the country's leading economic think tanks. We've been tracking Taiwan's AI-driven boom on this show for months, and we've explored really similar topics over and over again. The numbers this week got bigger and bigger. But as we'll see, bigger numbers aren't always the whole picture. So let's start with what actually happened. Taiwan stock market has two separate record-breaking sessions this week. The first on Monday, and then when news broke that the United States and Iran had reached a peace agreement set to be signed on Friday, and that sent oil prices falling sharply. Brent crude, the global benchmark price for oil, dropped more than 4% in a single day. That's your, crisis premium, as we call it. Oil is no longer priced in to stay elevated. Now people believe that the oil prices will return to at least somewhat a normal level. And when oil falls, inflation fears ease and stock markets tend to rise. Taiwan rose more than 1,200 points that Monday alone. Then on Thursday, the market rose again, this time shrugging off a hawkish signal from the U.S. Federal Reserve, which is America's central bank. The Fed suggested it might actually raise interest rates later this year. Now, that usually spooked some markets, but Taiwan's technology sector barely blinked. The reason is TSMC, Taiwan Semiconductor Manufacturing Company, the world's dominant contract chip maker. The company that physically manufactures the chips that power AI systems, smartphones, and data centers for almost every major tech firm on the planet. TSMC accounts for more than 40% of the total value of Taiwan's stock market. That's a huge market share. When TSMC goes up, the whole market tends to follow, and TSMC went up on both days. Beyond the stock market, the GDP forecasts were revised dramatically upward this week. GDP is gross domestic product, is the broadest measure of an economy's total output. Taiwan's central bank now expects the economy to grow 9.45% in 2026. Now, just for a comparison, the U.S. real GDP growth is forecast to land between 1.8 and 2.4. So over 9% for Taiwan. That is a very, very big number. And then there is the IMD World Competitiveness Ranking, published Thursday by a Swiss business school. It assesses 70 economies on factors like GDP growth, government efficiency, business conditions, and infrastructure. Taiwan climbed 2 places to 4th in the world, its highest ranking ever, behind only Singapore, Hong Kong, and Switzerland. The report specifically credited Taiwan's institutional stability, its semiconductor leadership, and its growing role in the global AI supply chain. Now, let's look more carefully at what those numbers actually contain. So the GDP growth story is definitely real, but it's heavily concentrated. When you break down where the growth is coming from, exports are expected to jump nearly 20% this year. Private investment is up more than 6%, but private consumption, that's ordinary people spending money inside Taiwan on, let's say, restaurants, housing, goods, and services, is only expected to grow by around 3.5%. That's solid, but it's nowhere near the headline number. What that gap is telling you is something analysts call a K-shaped economy. We've covered this before. So picture the letter K. One arm goes up sharply. That's the tech sector, exports, TSMC, AI-related industries, the stock market. The other arms goes sideways or slightly down. That's the domestic economy, ordinary wages, everyday spending. Taiwan's headline growth number is being driven almost entirely by the upward arm. The producer price index, that's the measure of what it costs businesses to make things before those costs get passed down to consumers, is expected to rise by more than 11% this year. That's a massive jump. But the consumer price index, the measure of what ordinary people are actually paying at the shops, is only expected to rise by about 2%. So why the gap? Well, because most of what Taiwan is producing right now isn't being bought by Taiwanese people. It's being bought by American companies. Taiwan's factories are churning out AI servers, advanced chips, and data center equipment, and almost all of it going straight into the U.S. supply chain. The inflation from building all that infrastructure is being exported along with the products. Taiwan bears the production cost pressure. America bears the consumer price pressure. For now, that keeps Taiwan's domestic inflation manageable. But it also means Taiwan's economy is more dependent on a single export destination and a single industry, and the headline numbers don't make that very obvious. While Taiwan was posting records, something else happened this week that's also worth us paying attention to. SpaceX, the American aerospace company founded by Elon Musk, completed the largest initial public offering IPO in stock market history. So that means when a company or a private company sells shares to the public for the first time and lists on a stock exchange. SpaceX raised about 75 billion US dollars. That's a lot of money within 2 trading days too. And the total value the market assigns to the company surpassed 2.5 trillion US dollars. That pushed SpaceX past TSMC in the global ranking in just about a week. TSMC dropped from 6th to 7th place. Now, is that a problem? Well, not directly. TSMC's share price actually rose during the same period, and its market value climbed roughly 2.29 trillion US dollars. Being pushed down 1 spot in a global ranking doesn't affect TSMC's business. But the SpaceX moment is worth noting for a different reason. SpaceX's valuation is currently trading at close to 100 times its annual revenue. It's basically how much money can I make in a year and how much people think my company is worth. People think the company SpaceX is worth 100 times that it's making in a year, that it's actually making in a year. To put that in plain terms, if SpaceX made the same amount of money every year for the next 100 years and didn't grow at all, it would just about justify today's prices. That's an extraordinary bet on future growth, specifically on Starlink satellite internet, space data centers, and AI computing from orbit. The company is still loss-making overall, and Taiwan is deeply embedded in that bet. Fubon Life Insurance, a subsidiary of one of Taiwan's largest financial conglomerates, participated in the SpaceX IPO, buying shares at $135 each. Honghai, the Taiwan manufacturing giant, better known internationally as Foxconn, announced this week a partnership with French energy company Schneider Electric to build next-generation AI data centers, positioning itself as a key infrastructure provider for whoever wins the AI race. Taiwan is, in this sense, the indispensable manufacturer for all sides of competition that it itself isn't running. Now, that's a symbolic relationship in one direction. Taiwan needs these clients to sustain its growth, and its clients need Taiwan's manufacturing precision to build their products. But symbiotic relationships aren't automatically stable. Which brings us to the event that actually started this week's market rally and what it might actually mean. On Monday, the US and Iran announced that they had reached a peace agreement, finally, hopefully, with a formal signing ceremony set for Friday in Switzerland. The immediate effect was exactly what markets expected. Oil prices fell sharply, inflation fears eased, and stocks rose worldwide. Taiwan's market surged over 1,200 points on that news alone. But here's what the headline didn't spend much time on: the terms of the deal. The agreement is a 14-point memorandum of understanding, which is essentially a formal statement of intent ahead of a full treaty, included some provisions that are worth reading carefully. The U.S. agreed to immediately lift sanctions on Iranian oil exports, something that it's been put on Iran for the last over a dozen years. Frozen Iranian assets held overseas were to be made accessible to Iran's central bank. A reconstruction fund of at least 300 billion US dollars to be funded not by the US but by regional partners was committed. The question of whether Iran can charge transit fees for ships passing through the Strait of Hormuz, that narrow channel through which roughly 20% of the world's traded oil passes, was left unresolved after 60 days, to be negotiated between Iran and Oman. Analysts who read the full text described it as a significant concession by the U.S. Iran had been under severe American economic sanctions since 1979 and under the most punishing secondary sanctions, which target any company anywhere in the world that does business with Iran since 2011. to have those lifted in exchange for a ceasefire and a promise to begin negotiations on nuclear material is, by most reading, a substantial win for Tehran. The U.S. simultaneously announced its remaining U.S. Indo-Pacific Command back to U.S. Pacific Command, dropping the word Indo entirely. And Indo-Pacific Command was established in 2018 to signal American commitment to the broader region stretching from the Indian Ocean to the Pacific. So removing Indo is, in the language of military signaling, a meaningful contraction of stated strategic scope. That matters for Taiwan and for the global companies whose AI investments depend on Taiwan, because the security environment that Taiwan operates in is part of what makes it a viable place to do business at scale. The IMD competitiveness ranking that we mentioned earlier, that placed Taiwan fourth in the world this week, specifically cited institutional credibility and the capacity to absorb economic shocks as the defining factors for competitiveness in 2026. Those factors don't exist in a vacuum. They exist within a geopolitical context which had just shifted tectonically on Monday, as we heard about this 14-point MOU between the U.S. and Iran. Taiwan isn't voiceless in this. President Lai met with U.S. lawmakers this week to advance defense cooperation and push for a double taxation treaty that would reduce barriers to cross-border investments between Taiwan and the U.S. And this relationship continues to deepen at the trade level. Two-way trade reached $250 plus billion US dollars last year, and the U.S. became Taiwan's largest trading partner for the first time in more than 20 years. These aren't small facts, but here's the tension that sits underneath the week's celebration. Taiwan's stock market rally was triggered by a peace deal that markets read as good news. The same deal, read differently, is a signal that American strategic presence in the broader region is being recalibrated from Indo-Pacific to Pacific Command, and that countries which have structured their security assumptions around that presence may need to adjust those assumptions. Because when the U.S. retreat their military coverage from covering everything that includes the Indian Ocean to maybe just the first island chain formed between the U.S., Taiwan, and the Philippines, to maybe even further out into the Pacific, that's not just a Taiwan-specific problem. It's a global one. If the architecture that underpins Taiwan's role as the world's most indispensable chip manufacturing shifts, even slightly, the ripple effect reaches every company, every government, every supply chain that depends on what comes out of those fabs. So, is Taiwan still under the protective umbrella of the U.S. after this peace deal? We don't know, but I guess that's what this show is for. We'll continue to keep our eyes on it. But the conclusion this week, Taiwan just posted some of the most impressive economic numbers in its modern history. The stock market is at record highs. The GDP forecast has nearly tripled. The world's most respected business school says Taiwan is the fourth most competitive economy on the planet. And yet the growth is narrow, concentrated in one sector, one export destination, that's the U.S., one technology wave, and the domestic economy is along for the ride, not driving it. The geopolitical moment that gave Taiwan's markets their best week in years may also be quietly signaling that the world is rearranging itself around Taiwan in ways the scoreboard doesn't quite capture. Taiwan's economy right now is, we've used this phrase before, a load-bearing wall in the global AI structure. And the question isn't whether the wall is strong. It is. The question is what happens to the structure if the foundation around it shifts. A wall doesn't make a house. Combined with a foundation, that's how it makes a sturdy home. And if they ever do shift, well, this show will be here to tell you all about it. Thank you for listening to the show. I'm Joey Cho. Tune in next week to find out more about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.